Hello everyone, and welcome back to the channel. If you're new here, we're all about making the world of finance and trading accessible to everyone, no matter your experience level. Today, we're retackling a huge topic that often intimidates newcomers. Where do I even begin with trading? It's a question I get all the time, and the answer I almost always give is to start by understanding and embracing trend trading. Trust me, by the end of this video, you'll see why it's one of the most beginner-friendly strategies out there. So, what exactly is trend trading? At its core, it's beautifully simple. The main idea is captured in the classic market adage, the trend is your friend, instead of trying to predict market tops or bottoms, which is incredibly difficult even for seasoned pros. Trend traders aim to identify the current direction of the market and ride that wave for as long as it lasts. Think of it like swimming in a river. You can try to fight the current, or you can go with the flow. Going with the flow is a lot easier and will get you much further with less effort. That's trend trading in a nutshell. Markets generally move in three directions: up, down, or sideways. An uptrend is characterized by a series of higher highs and higher lows. Imagine a stock price going from 10 to 15, pulling back to 12, then rallying to 20. Each peak is higher than the last, and each trough is also higher than the one before it. A downtrend is the exact opposite, a series of lower lows and lower highs. The price might drop from 50 to 40, bounce back to 45, then fall again to 35. And a sideways market, or a range, is when the price bounces between a consistent high and low, like a ball bouncing between the floor and the ceiling, without a clear direction. A trend trader's primary job is to spot the uptrends and downtrends and, for the most part, stay out of the choppy, sideways markets. Now, why is this so perfect for beginners? First, it simplifies decision-making. You're not trying to analyze a million different economic reports or complex financial statements. Your primary task is to answer one question: what is the dominant direction of the price? This focus helps cut through the noise and paralysis that many new traders feel when faced with endless information. Second, trend trading is a rules-based system. You can establish clear, objective criteria for when to enter a trade, where to place your stop loss to manage risk, and when to take profits. For example, you might decide to buy when a stock breaks above a key moving average and sell when it closes below it. This mechanical approach helps remove emotion from your trading, which is arguably the biggest obstacle to long-term success. Greed and fear can lead to disastrous decisions, but a solid plan based on the trend can keep you grounded. So, how do you actually identify a trend? There are several tools, but let's start with the most basic one: your own eyes. Simply looking at a price chart can often tell you the general direction. Is the price chart moving from the bottom left to the top right? That's likely an uptrend. From the top left to the bottom right, that's a downtrend. But to be more precise, we use technical indicators. The most popular and effective tool for trend identification is the moving average. A moving average smooths out price data to create a single flowing line, making it easier to see the underlying trend. A common strategy is to use two moving averages, a short-term one, like a 50-day moving average, and a long-term one, like a 200-day moving average. When the short-term average crosses above the long-term average, it can signal the start of a new uptrend. This is often called a golden cross. Conversely, when the 50-day crosses below the 200-day, it's known as a death cross and can signal a downtrend. Another fantastic tool is the Average Directional Index, or ADX. Unlike moving averages, the ADX doesn't tell you whether the trend is up or down. Instead, it measures the strength of the trend. The ADX is plotted on a scale from 0 to 100. A reading below 25 generally suggests a weak or non-existent trend that's sideways, choppy market we want to avoid. A reading above 25 suggests the market is trending, and the higher the reading, the stronger the trend. So, you could use moving averages to determine the direction and the ADX to confirm the trend's strength before entering a trade. This combination gives you a powerful, two-step confirmation process. For example, if you see a golden cross and the ADX is above 25 and rising, you have a much higher confidence signal that a strong uptrend is forming. Let's walk through a hypothetical trade. Imagine you're looking at a chart of company XYZ. You notice the 50-day moving average has just crossed above the 200-day moving average. That's your first signal. You then check the ADX, and it's at 30, indicating a strengthening trend. So, you decide to enter a long position, meaning you're betting the price will go up. Now, the most crucial part, risk management. Before you even click the buy button, you need to know where you'll get out if you're wrong. This is your stop loss. You might place your stop loss just below the recent swing low or below the 200-day moving average. This ensures that if the trend suddenly reverses, your losses are capped at a predetermined, acceptable amount. As the price moves in your favor, you can use a trailing stop loss to lock in profits. This means you move your stop loss up as the price rises, protecting your gains while still giving the trade room to grow. You might decide to finally exit the trade when the price shows signs of weakness, like closing below the 50-day moving average. The beauty of this is its discipline. You have a clear plan for entry, for managing risk, and for exiting. You're not just guessing or trading on a hot tip from a friend. You are following a process. This process-oriented approach is what separates consistently profitable traders from those who just gamble. It builds good habits right from the start of your trading journey. Furthermore, trend trading can be applied to any market: stocks, crypto, forex, commodities, and across any time frame. You can be a long-term trend follower looking at weekly charts, or a day trader looking at 5-minute charts. The principles remain exactly the same. This versatility means that as you grow as a trader, the strategy can grow with you. Of course, no strategy is foolproof. Trend trading has its challenges. The biggest one is during those sideways, range-bound markets. When there's no clear trend, a trend-following system can get whipsawed, meaning it generates multiple false signals, leading to a series of small losses. This is where patience and discipline come in. You have to be okay with sitting on the sidelines and waiting for a clear trend to emerge. Remember, not trading is also a valid position to take. The goal is not to trade all the time, it's to trade when the odds are in your favor. Using a tool like the ADX can be a great help here, as a low reading will explicitly tell you to stay out of the market. Another challenge is that you will never catch the exact bottom or sell at the exact top. Trend trading is about capturing the meat of the move, the big, middle portion of the trend. You will always get in late and get out early, and you have to be okay with that. Trying to perfectly time the market is a fool's errand. Being profitable is what matters. So, to recap for all the beginners out there feeling overwhelmed, start with trend trading. Focus on identifying the direction of the market using simple tools like trend lines and moving averages. Confirm the strength of that trend with an indicator like the ADX. Always, and I mean always, define your risk with a stop loss before you enter any trade. And finally, develop a clear plan for taking profits. By focusing on this one robust strategy, you can build a solid foundation, develop discipline, and gain the confidence you need to navigate the markets successfully. It's not a get-rich-quick scheme, but it is a sensible, logical, and time-tested approach to trading that has served countless traders well. Thank you so much for watching today. I hope this breakdown has demystified the starting point of your trading journey. If you found this helpful, please give this video a thumbs up, and don't forget to subscribe and hit that notification bell so you won't miss our future content. Let me know in the comments if you've tried trend trading or what your favorite beginner strategy is. Stay safe, trade smart, and I'll see you in the next video.